Good afternoon, traders and investors. Will back here with another one, and welcome back to the channel. So in today's video, we are going to be going over 5 of the top options plays that I will be looking to make over the course of the week. Just a quick recap, guys. On the channel, we do the put wheel strategy, meaning we are looking to write or sell puts at a designated strike price on stocks that are near support to generate weekly premium as income. If ever we don't get assigned, that's fine. We just pocket the premium. If ever we do get assigned, we'll be looking to write covered calls against the stock. Now, this is a very good strategy, whether you're a beginner or advanced investor, to supplement your portfolio with weekly additional income. So in today's video, guys, we're going to be going over the last 10 plays that we took last Sunday, and we're going to go recap exactly how those plays did last week. And we're also going to be presenting 5 new plays for this week in course. Now, we'll be tapering it back to about 5 plays on an ongoing basis here, guys. I know I gave 10 last week, but it is a bit much for most people here. And in my own portfolio, I'm only running between 5 to 7 plays on any given week here. So in that case, we'll be tapering it down to 5, but the purpose of these videos here, guys, is not necessarily to give you the exact plays, but more to present a general guideline of how I'm choosing my plays and my strikes, and hopefully it helps you a lot in your own play selection here. So we're going to be going over last week's 10 stocks, then we're going to do this week's 10 stocks. But before we do that, guys, let's present the rules of the put wheel strategy. If you haven't seen my video on how this strategy works, I will put it in the link on top of the video, top right corner right now for you guys to go check out. So once you've checked that out, come back to the video here and we can get started. Now, in terms of the general rules here, guys, very, very simple rules in terms of writing these puts, right? So number 1 needs to be a solid company. Do not write any puts on any stocks that you do not want to potentially own. That is rule number 1 and is the most important rule in the entire book. Number 2, we want to be targeting to write on the red or generally flat days. Now, if a stock obviously goes up 3, 4, 5% on the day, obviously it's not going to present a good opportunity to be writing some puts. Puts are best written when the stock is currently red, and then you can write below the expected move or potentially at a decent support level. It really adds to the possibility of gaining some very decent premium. If the stock has moved up too much in any given day here, guys, we don't want to chase. We are waiting for the stocks to come to us in our zones, and the further that they pull back here in the early week gives us the best chance to write even below that for a chance of a potential bounce, which makes us pocket the premium. Number 3 here, we want to be looking for stocks in a monthly uptrend or in a long-term range. This gives us the best possibility here of those bounce potential, right? We don't mind being assigned, but the general gist of the strategy here, guys, is we're just trying to farm as much premium as possible. So we're putting all the odds in our favors and going with the winds to our backs, so to speak here, and giving our long-term bulls the potential to buy the dips, which is why we want to be in a monthly uptrend or at least a long-term range. Number 4, we don't want to be writing any positions here when the company has earnings in any given week. It just makes for increased volatility, and obviously earnings are very unpredictable, so we just want to keep all the odds in our favor of not being assigned potentially here, and earnings can go either way, so we really want to avoid any potential surprises to the downside. And number 5 here, we want to be writing at an area of support. This is very, very important here, guys. You'll see that all or most of my stocks here are at very big support levels. Once again, it increases the odds here that we will not be assigned. Obviously, once again, we don't mind being assigned because then we can write covered calls, but the goal is to just be farming as much premium as possible. So writing here at a support area or a breakout retest zone really improves our odds in terms of the probabilities of our short puts here ending worthless on the week, meaning we pocket all the premium. And number 6, we want to be targeting here in terms of our premium per week, 0.5 to 1% in weekly premium. If we're always doing this every single week here, guys, on the value of the account, it means that our portfolio should be going up here 0.5 to 1% per week on an annual basis here, meaning that our ROI should be anywhere between the range of 20 to 50% per year if we're running the strategy correctly. Now, let's go and do a quick recap here of last week's stock. So all 10 of them, we'll do them very quickly here. So number one is going to be Fortinet. Fortinet was a stock that we picked last week here. We were saying that anything below $60, $60 to the $58 range was a very good pick. Fortinet, obviously in a very nice, decent area of support here. The lower $60 to about $58 represents a very, very healthy area of support in my opinion here. We also have our weekly uptrend at our backs now, and just looking for a weekly higher low for further trend expansion here. Now, the stock is at a very relatively juicy valuation here, and the company is very profitable as well. I like this play a lot, and if you can see here, the stock never really traded below $60 in terms of a close. So if anybody would have written last week between $60 and $58, you would have been able to capture all of that premium here without much risk. Now, stock number two is going to be Cloudflare. So Cloudflare, we were looking for a play here below the expected move, which was about $76.53. We were looking for anywhere between $75 and $70, depending on the movement of the stock. Now, this was a classic breakout retest trade. You can see this whole area, which was previous resistance right now, was acting as support. So this is what we call the breakout of your previous resistance, and now sit on support as the retest. So breakout, retest, our moving averages were here as well. And the stock did have a nice little dip early on in the week here, Tuesday and Wednesday, which allowed us to potentially really get some juicy premium. 75 all the way down to $73 contracts would have been a very decent play. So that as well was a very juicy play because the stock ending obviously over $80. So any puts that would have been written here, 75 to 73 over the course of the midweek, would ended up pretty much worthless. You would have pocketed all the premium. So that's pretty much 2 for 2 on those calls. Stock number 3 was going to be Apple. Apple, we were looking for Apple here, lower end of the range here in terms of the 180. I was saying anything 180 and below was pretty much a gift for Apple. Why? It is currently in a very nice area of previous support. So we were looking for that to hold up, and it did very beautifully here. So if you were able to write any puts between Tuesday and Wednesday in the lower 180 all the way down to about 178 for some good premium, those as well would have ended worthless midway through the week. You would have been able to pocket all that premium here. So another very juicy trade on Apple. Stock number 4 was Amazon. Amazon, we were also looking for a retest of our support zone. So we were saying anything pretty much below 150 would have been a gift on Amazon. Amazon, you see it best on the weekly here. Very nice breakout of your current, of the previous area of resistance here, breakout of the zone, retesting of the zone, and now due for the rise. So Amazon, we were looking anything 150 and below. We actually on Tuesday and Wednesday dipped into this area, which did present a good opportunity to be writing either the 150s or the 149s, which would have been almost the top end of your support range. Once again, stock ending well above that 155. So any puts that would have been written here, 150 to about 149, would have ended worthless on the week, and you would have pocketed all of the premium. So very nice trade on Amazon as well. Stock number 5 here was Google. Google as well, same concept here. We were just looking for a retest of our previous support range. The support range here, guys, was between 141 and about the 138 range. And you can see here on the nice little dip that we had on Wednesday, it came right down into our zone, which presented a great opportunity here to be writing puts anywhere 140 all the way down to 139, right into that zone here, which really would have been previous resistance, currently acting as support. Beautiful breakout retest zone of your support area. So hopefully some people were able to pick this trade all either on Wednesday throughout the day here, which would have given you some very juicy premium. And obviously the premium would have ended worthless on the week. You've been able to pocket all of those gains as the stock finished high of about 148. So very decent trade on Google as well. Very happy with the results on that one. Now, the next stock on the list was Oxy. So Oxy will be on this week's list again, but Oxy, you can see here, very beautiful area of long-term support here. This whole lower $56 range is the range that we were targeting. And you can see we had multiple opportunities over the course of the week to be writing either 56 or 55 puts. The stock ended above 56. So anybody who would have written any puts here between $56 and $55 on the course of the week, you would have benefited from those premiums being pocketed entirely here as the stock ended above $56. So once again, very beautiful trade, very beautiful area of support to be writing some puts at currently. And Oxy, I really like the company. Nothing wrong with the company at all. Just has been plagued a bit with the energy stocks slightly trending down here over the past couple of weeks. But this area of support should be fairly hard for the bears to break through in a significant fashion. Obviously, Oxy, well-known stock here, petroleum company, one of Warren Buffett's favorite energy plays as a whole. So very nice trade on that one indeed. The next one to be looking at here, we looked at Trade Desk. So Trade Desk was the one and only stock that we were looking for here that wasn't really performing too well here in terms of being on a weekly uptrend, right? We were kind of looking for breakout retest trades in all of our previous trades. This one was a pure support trade. So we were looking for anywhere between $63 and $60 depending on the move down. Your expected move on last week was about $64.85. And you can see here when we open on the markets here on Tuesday morning, very red, it got down into the 63. So in Tuesday or Wednesday morning, if anybody was looking for that $63 to $60 range that we would have pointed out, it acted as very beautiful support, and you would have pretty much been able to capture all of that premium as well. Stock ending north of $66, almost $67. So very good trade there as well. Trade Desk is still on my watch list here. If it does continue to dip into the future here, really looking solid at the lower $60 range. So hopefully you guys were able to make some juicy premium here on Trade Desk as well. This trade panned out really well, despite moving below the expected move, recovered nicely into the end of the week with your general market rally, reacting nicely from our support zone here. And now the next play that we were looking for was obviously Alibaba. Alibaba is a stock that I talk a lot about on the channel here. But Alibaba currently being plagued by a couple negative news items, right? So number one is obviously the negative news coming out of China, and this stock has been in an absolute rut here for the past 2 months, but represents a very decent trading opportunity. And in this case, we were looking for anything pretty much in the lower than the expected move. So the expected move was about $69.73. We were targeting the $67 all the way to $65 range. The stock did dip in there here. Tuesday, Wednesday would have opened up these 65 put contracts here for at least 0.5%, and obviously the stock ending higher than that on Friday here, so 69.42 on the close on Friday. Very juicy opportunity. Baba still representing insane value in my opinion here, guys. The price to earnings ratio is only 9 on a forward basis for the next 12 months. It's about a 7. Very juicy price to earnings ratio. And if you take a look at the price action here, yes, we are in an overall downtrend here, but we're almost back to pretty much 2016 prices. 2016 prices, Alibaba at that time, guys, was really trading, you know, they only had about $20 billion in revenue, right? So if we take a look back here, I don't know if TradingView is going to give us the data all the way back here. Let's see if it does. So can we get it? Yes, 2016 EPS, 2016 revenue, that's what I'm looking for. So the reported revenue was only $22 billion. Closing this year, guys, we're closing in on about $130 billion. So the stock price is exactly the same as it was back in 2016, except that they've 6x the revenue and really grown EPS. It's just in a general macro downtrending cycle right now with the negative China news, but I do believe that this is one of the best value plays in the entire market right now. If you are patient enough to wait for the recovery story, and especially being able to write puts here in the lower $60 range is a very juicy opportunity. So last week's put plays were very juicy as well. Now we will be looking for Alibaba to potentially regain the daily uptrend right here. If we do get a recapture here and potential retest here, try to reset the daily uptrend, once again, I'll be featuring this stock potentially on next week's video. It's even representing some good value, but I really like anything, guys. 66, 65, 64 is my sweet spot for Baba. Now, the before last stock here we were looking at was Pepsi. So Pepsi really maintaining a very tight area of support currently. I like it at the $165 level. And you can see Pepsi here, very nice, beautiful monthly uptrend as well. Pepsi doesn't really trend much below this 26 EMA on a monthly time frame. So it's really presenting us a good opportunity to be picking up some stock at these lower areas here. So I really still like this 165 zone. If you would have been able to write the 165s over the course of last week, you would have been benefiting here by capturing all the premium as it did close above 168. But I do, however, guys, like the 162.50s a lot as well here. So going to be maintaining this one on the back burner in terms of the watch list. If we do get a little break here into a downtrend and break of this support, I will definitely be looking to shop at the 162.5 level. But all in all, last week's trade around the 165s played out very beautifully as well. And now before lastly, we had Tesla. Tesla, guys, we were looking for a potential dip early on in the week here and lower it to about the 212, 210 area. And we were targeting the 200s. Now the 200s did show up early on in the week, presenting over $1 in premium. So that would have been roughly your 0.5% rule. And you can see Tesla ended the week above 200. So once again, Tesla has earnings this week. So I will not be playing Tesla this week. Should be very, very volatile. But for anybody who would have taken this play last week, the 200s would have been a very good opportunity here. Very nice area of previous support. right? And even though we're on a spectacular downtrend right here, we are approaching daily oversold conditions on the RSI. So it did represent a very juicy buying opportunity here to be writing some options in the lower $200 mark. So hopefully you guys were able to benefit from that as well. Tesla, another one of our plays here, guys, that if you would have taken it, it would have pretty much ended worthless. So very, very nice trade on Tesla as well, giving us some real room to move here, especially since we were targeting 200 on the lower side. That would have been off of Monday's close, another 6% to the downside here. So it would have been really, really hard for Tesla to move down there. The expected move was about 210.5. So it would have been very strange to see Tesla move 2 standard deviations from the expected move all the way down into 200. So that's why it was a very good opportunity down there. And now lastly, guys, we had TXN. So TXN presented us an early opportunity early in the week here. Tuesday and Wednesday, we were targeting a bit lower than the expected move. I was targeting the $160 range. So $160 range would have been a very, very juicy area. You can see how many times the 160 area has played as support. And once again, now targeting the weekly breakout retest here for the weekly uptrend, and the bulls were able to get that. So early on in the week here, Tuesday or Wednesday, the 160s were available here for some very, very juicy premium if ever anybody was interested here. 160 all the way to 159 actually was a very good opportunity, and the stock obviously ending much higher than that on the Friday close. So any puts that would have been written in this zone was just a very good opportunity to capture that weekly income. So that's pretty much all the stocks that we had for last week here, guys. And you can see most, if not all of them here, had very good performance. Any of the plays that we would have taken to write last week would have mostly ended up worthless, meaning that all the premium just sits in your pocket. So hope everybody was able to take a bit of inspiration from that in terms of how I find my plays and which strikes I'm looking to play. Now, let's get into this week's current plays that we're going to be looking at here. And we have some fairly juicy ones as well here, guys. So let's take a look. So first off, first company we're going to be looking at is Philip Morris International. So these, if you guys don't know, they are obviously a tobacco producer here. So Philip Morris, I like the company a lot. The valuation is decent. They pay a very, very juicy dividend as well. And look, we're coming into a very nice area of support. This whole $90 all the way down to about $89 range is a beautiful area to be writing puts at. Every time the stock pulls down into here, I always am usually writing puts on this stock. So I'm going to be looking for Philip Morris. If we do continue this slight little move down early on into the week, $91 to $90 is going to be the target for me. If we take a look at the options chain as a close of last Friday, you can see the 91s don't yet present 0.5% here, guys. 0.5% would be roughly 45 cents on the bid. And if you don't know how to do that calculation, it's very, very easy. Just look for half of the strike price here in cent increments. So very, very simple. If you're writing $91 puts, right, you'll be writing 91 times 100. So your total exposure will be $9,100 at this strike. Now, the reason I say we want roughly 45 cents is because 0.45, right? 45 cents times your 100 shares exposure is $45. $45 divided by your total exposure on the 91 strike here is roughly 0.5%, right? 0.01 would be 1%. And you can see here, this is roughly half of that coming in at 0.5%. So that's why we're looking for about 0.5%. If Philip Morris dips a little bit more and I can find 0.5% on the 91 strike, I will most likely oblige to write that. Now, if the stock pulls down a bit further than that, let's say we pull down into the $91 area starting on Monday morning or potentially into Tuesday, then I'll be going one strike down and looking at the 90. So we want to try to get as low as possible here into this whole support area. So I'll be looking for either the 91s or $90 depending how we open. Obviously, if it opens, this isn't written in sand, right? If we open at 91.50, that'll mean most likely you'll be able to find 0.5% on your 90s. The 91s maybe are going to be closer at that point to 1%. So we'll go one strike lower and try to get 45 cents here on the 90s. So 91 or 90 is what I'm looking at on Philip Morris. Now, our second stock that we're going to be looking at is CELH. So Celsius Holdings, guys, beverage company with very insane growth prospects here over the next 2 to 3 years. Now, Celsius Holdings, if you're familiar with the channel, I was writing a lot in the lower $48 to $49 range the entire time that we were down here. And once again, with Friday's sell-off after a downgrade, we once again get presented the opportunity to be writing some options potentially down here in the $48 range. And $48 range is still a decent amount off of current share price. It's roughly about 7, almost 8% 8% here off of the current share price. So I will be looking for the $48 strikes on Celsius Holdings. Take a look at the options for the week. You can see these right here. The 48 strike right now is trading for about 35 cents. You know, the midpoint right now is about 33, 34 cents right now, but still well over our 0.5% rule. So all in all, 0.5% rule here, guys, would be about 24 cents. But if we take current price right now, right, 34 cents, 34 divided by our $48 strike, right, we're roughly looking at 0.7% for the week. So very juicy premium with a lot of space for the stock to move as well. And all in all, guys, we are approaching on the short-term timeframes with such a hefty drop here, 4-hour oversold conditions. So we're coupling short-term oversold conditions with a very big area of previous support. That's why I really like the $48 strike. This was a previous contract that I wrote before, so we'll erase that right now. But just know that this area is very, very juicy support, and I will potentially be looking to make a play on Celsius Holdings. Should we open red even on Monday, even maybe the lower strikes might open up as well. You may even be able to find 0.5% on the 47s. The lower, the better for this company, as long as we're playing off of this support area. Now, the third stock that we're going to be looking at here is Starbucks. So Starbucks needs no introduction, legacy brand, obviously, and is coming into a very juicy area of support. We're talking between $91 and roughly $89 is going to be the area that I'm personally targeting for this stock. Very nice previous support area, acted as support back in October and was big previous resistance here back in 2022. So should be a very juicy area for the Bulls to be able to really play some good defense in this area. If for ever which reason, guys, we just continue this daily downtrend into this lower level, guys, I will be playing Starbucks in the $91 to $90 range. Now, currently, since the stock is at $93.86 and Starbucks has low implied volatility, you aren't able to find the premium just yet, which is why I'm keeping this stock on the watch list. If ever we have a red Monday, which pulls us back into the lower 93 or even 92 area, this should open up the premium on the $91 contract. So $91 contracts, I'll be looking for at least 45 cents here, which is going to be 0.5% for the week. So this is the area that I'm targeting. If Starbucks has a really bad day on Monday and we open up, you know, lower $92 area, let's say we really open up red by about 1.5%, you know, even maybe 2% to the downside for some reason, and we open up with a 91 handle or really low 92s, you may be even able to get the $90 strike here for 0.5%. So between 91 and 90 is going to be what I'm targeting for the current week on Starbucks. Very juicy area of support in my opinion. Now, the next play we're going to be looking at, like I said earlier in the video here, is once again going to be OXY. OXY needs no introduction, right? We just presented it. Very juicy area of support, guys. I really love when this stock pulls down to this lower area. If the $56 puts are once again going to be open on the week, I will most likely be writing those. Now we can see on the week here for this current week, the premium is roughly sitting at 0.47. So 0.47 divided by our strike price of roughly $56 is almost 1%. So it's about 0.8%. Now, that's a little high and it doesn't give us a lot of wiggle room, right? Between the current stock price, 56.42 and 56, you'll see, guys, there's only about 1%. So it's only about 1% to the downside of buffer that you have. So if we open up red on Monday, which brings us into the lower 56, even lower than this, or even a 55 handle, I may just be shopping for the 55s. Now 55s, I'll be shopping for at least 0.5%, which means that you need to find at least 27 cents, right? So 27 divided by 55, that's roughly your 0.5% on the week. So I will be shopping here for the 55s. If we pull a little bit off Oxy, let's say Oxy goes green on Monday, pulls up into the 57s, and I can still find the 56 handles here for 0.5%, let's say, roughly 28 cents. I will be going for those, but all in all, great area to be playing off of here, guys, in terms of a general support zone on OXY. So that's why I like it a lot. And lastly, guys, the last stock, which was also featured on last week, is going to be Fortinet. You'll see, guys, that if stocks could still maintain the relative areas of support from week to week, I will be playing them on a recurring basis. So just because it was featured on last week's video does not mean it cannot be featured again. If it's still around the same support area, still offering good premium, that's why we will continue to be playing these, right? So Fortinet Still a good opportunity, still looking for anything below $60. Now, since we're so close to $60 right now, I will most likely be targeting the 59s or the 58s. 59s or 58s from current price would give us a little buffer here of between 3 to about roughly 4.5%. So let's say we open red on Monday here, the stock is still trading at a relatively very good support area. This whole 57, 58, 59 zone is the target area for me, right? Weekly uptrend, weekly bulls are in full control. So any dips should be met with good buying opportunities by our long-term bulls here. And Fortinet still presenting some decent opportunities here on those strikes, right? So you can see the only one that's trading at 0.5% right now is $59. So $59 is not so far away from our current price right now, right? So you can see the 59s, if I can get my chart to cooperate here, right? So the 59s, guys, are only trading roughly about 3.33% off the current share price. Now, if we get a little bit of a dip here on Monday morning, I will be looking to potentially play the 58s. It just gives me a little bit more wiggle room. And on the 58 strike, you need to see at least roughly 29.30 cents. So they're not quite there yet. I'm going to be looking for a potential dip, but I'm very interested in playing Fortinet here on a $58 strike for the week. I think it should be a very decent opportunity here. Current support, right? That $58 level seems to be very, very good support for the stock. Your moving averages on the weekly are there as well. So looking to make that play on Fortinet. And now lastly, guys, I have a bonus play for you, right? Do not do this if you're not an experienced options trader or if you do not want to own the stock. This is going against one of my major rules, which is don't play any stocks that have earnings this week. But if you are in the type of mood, full disclaimer here, a lot of risk on the position. I do not recommend this at all. This is just a trade idea, guys. It is going to be Netflix. Netflix has earnings on Tuesday. So usually I don't play these, but I have a very bullish lean for Netflix. I do believe that they should be able to deliver some good earnings and good subscriber growth. That being said, obviously earnings are very volatile and they can go either way. Netflix, huge support area, 450 down to about 425 on the weekly. And it would just be for our longer term monthly breakout retest, setting a monthly higher low if ever we come back down in this area over the course of the week with earnings for potential rises here later into 2024. And Netflix is offering some very decent premium on the strikes here, guys. But if I do make this play, I'm going to be very conservative. I will be targeting the lower end of this support area here, guys. I'm going to be talking about the 425 area, the lower end of this band. And we can see here on Netflix Premium here, 425 is presenting about $2.20 currently, which does respect our rule, right? If we were going for the 450s, right, the expected move here on Netflix, let me just start off with this. The expected move on Netflix, and this is why I'll show you guys why I want the 425s. The expected move is about 6.8%. To the lower end, it's about 450. So that's the expected move, right? So if I'm targeting potentially the lower end of this range, the 425s, that would be roughly an 11% drop. So I would be targeting roughly double the expected move. So almost 2 standard deviations. And that's why I like the 425s. It's a lower range of my support area. And also, it's 2 standard deviations away from what earnings are traditionally expecting. That being said, it does respect our 0.5% rule, right? $2.20 of premium divided by 425 strike price is about 0.5% for the week. So it could be a very juicy opportunity for me to be shopping for some Netflix here by writing some puts in this lower area, giving myself a very wide margin of error here, right? The very aggressive move would be going for the 450s, but I'm not going to do that. I like to stay more conservative if ever I do take an earnings play. But once again, guys, I do not recommend these plays at all. Well, actually, I don't recommend any of these plays because none of this is financial advice, of course, right? But in terms of myself, the way if I do ever play earnings on a company that I love, that is in a monthly uptrend, that I'm looking for a monthly very solid area, I'll usually try and play as far away as possible to give myself the best chance. And then if we do spike down here, I do not mind buying Netflix shares at 425. And that's the real moral of the story, guys. I don't mind owning 100 shares of Netflix at this lower level right here. I think it represents a good opportunity for me. So that's pretty much everything that I had for you guys in today's video. Obviously, the next videos will be significantly shorter since we're only going to do 5 stocks on a rolling basis. But hopefully this video has been educational for you guys, shows you guys how I pick my strikes, what premium I'm going for, and what I'm looking for in terms of technical support areas for the given stocks that I'm choosing. So thank you guys for watching very much. If you learned anything, consider dropping a like on the video. It really helps me out for the algorithm, and consider subscribing to the channel. We do a lot of these different educational videos on a weekly basis, and we also do daily market recaps Monday through Friday on major indexes, major tech stocks, and earnings. And as usual, guys, if you have any questions on the strategy, any specific stocks, or on technical analysis, or how I choose my options more specifically, leave your questions down in the comments and I'll be happy to answer you. So I'll see you guys tomorrow for a daily market recap, Monday after the close. Take care and peace.